Hello students and welcome to the lecture. So students, as we know that we are covering the financial knowledge and basically the banking awareness part of it, right? Financial knowledge and the banking awareness part of it. All right? And since last few videos we have been basically discussing over a banking regulation act 1949, and we have discussed a various provisions enumerated, or you can say provided within this act. All right, already I had told you, if someone of you is basically preparing for the banking exams or want to have their career in the banking field, all right, so these students are to make sure that they are revising the banking regulation act properly, because they are going to deal with this act not only till they clear the exam but also when they will be working in the bank. All right, so if your base is clear even before you start your career, it's just a rhyming, okay, then it will be a beneficial for you. So with this note, let's start this lecture. Actually, in the previous lecture, after finishing the, or you can say previous to previous lecture, when we had finished the branch expansion phenomena or branch expansion provisions, then we had started the control over management. All right, already we had discussed what do you mean by the management. Okay, what is the primary role of manager. All right, we had discussed what is board of directors. Okay, we had discussed who is chief executive officer. All right, we had discussed who is the chairman, or who is, what is the permission, what is the position, not permission, what is the position of chairman of board of directors. All right, so we had discussed this kind of things previously. All right, I hope that you have revised all these facts and figures already before you have arrived for this lecture, because revision is a must, or you can say a very important part in our journey of preparation for the competition exams, right? So about chairperson we had discussed. All right, what is the minimum criteria he should have. Also we had discussed about the director's qualification. Now we have to discuss about the very important phenomena in any individual as well as the director. All right, so that particular, you can say, the skills and you can say the personality traits. Instead of calling them skills, I would like to calling them personality traits. So basically, if we talk about the personality traits, not only the director but any individual should have, but because we are talking about the banking, so we will be a little bit professional in this scenario. Okay, so basically, if we talk about the personality traits of any director or any person who is in the management and handling the banking, so he or she must have the good character and the integrity. Okay, the integrity and reputation of individuals are of utmost importance. Banks need leaders who are honest, ethical, and have a track record of maintaining high moral professional standards. All right, so all of these characters are not only important for banking management, okay, but also important for customer trust. All right, how how these things are important. So if we talk about the banking management, so basically if they are having a good quality, like the good character, integrity, okay, if they having a track record of maintaining high moral and professional standards, so they will they will effectively, efficiently, morally, and professionally, handle the requirements. All right. This could be only done if the particular person who is dealing with these things having that qualities within himself. All right. For customer trust, also it is very necessary that the top leadership or director or the top management of any particular bank must be in accordance with the good character and the integrity. Why? Because customer could easily trust on them. So does trust the bank. All right. If a person or a customer knows that the bank in which he is going to deposit his money, he is going to taking a loan from it, he is going to inviting investment from that bank. If the top management of that particular bank is having the good character, integrity, morality, you can say professionalism, then he could easily trust on them. All right. Like suppose if this is the bank, all right, and this is me. I am an individual, or you can say I am a customer. Okay. Now, if I have to access the services of this bank, which name is XYZ. Okay. But I know that the person who is managing the field, or you can say, suppose if I have to deposit the amount in this particular bank, okay, and I know the director of deposit department is not having morality, is suspicious characteristic, okay, and he or she having a past record of some malfeasance. All right. So if I know this particular thing, and I know that when I will deposit my money with the XYZ, the money will ultimately under the Department of Deposits. So how and why I will deposit my money with him if I already know that that person is not capable to handle the things fairly? All right. That's why it is very important to build the customer's trust. Okay. Because we are living in a digital era. Okay. Even the class, even you can say the platform on which we are talking right now is also belong to the digital era. Okay. So because we are living in a digital era, it is very easy to get the information about any about any bank, about their management, about their managers, their directors. All right. So that's why it is necessary that the person who is having the responsibility of director of any department, or he or she is a member of board of directors, he must have this kind of characteristics. Okay. The trust and confidence of stakeholders, including customers and shareholders, lie on the integrity of bank's management. So not only the customers, even the shareholders follows up the good character and the integrity of the directors. Why? Because then only they will first invest in the bank. If they know the management is good, having the good character, having the integrity, having the morality, then only they will invest in the bank. Second, then only they will appoint a person as a director. Okay. Because I had told you, in the banks, in the corporations, there is a particular meeting called the annual general meeting, or known as the AGM. Okay. In which the shareholders meet, discuss various things about the companies. Also they do the voting for select directors for the board, and as well as the managing director. Okay, he is also the member of the board, but basically he is the front face of any management tool. Okay, so in this scenario, if we talk about it, so if the shareholders know that the person who is standing in front of them is having a good character, integrity, and all the things, okay, then only they will vote for him so that he could become the part of the board of directors, and then the shareholders could easily expect a good amount of their investment. Okay, but if they know that the person who is standing in front of them is having the past record of you can say misleading the things, fraud, so why they will select him to the director, right? So that's why these characteristics are required. All right. Thereafter, the financial acumen. Management personnel should have strong grasp of financial concepts, including financial reporting, asset liability management, and the risk assessment. Okay. So totally, we could say, if we're talking about the banking, all right. So banking field is basically deal with the financial services. Financial services. Okay. So now the question is, what do you mean by the financial services? Like I said, the banks are basically dealing in the financial services. Then I must require to specify what do we mean by the financial services. Like what are the financial services? Okay. So in a broad term, the financial services are basically of the two types: borrowing and deposits in the terms of banks. Okay. Like borrowing is done by the people or the person who having the need of money. Okay, deposits is basically done by the person who is having excess amount of money. All right, so these are the financial services doing by the bank. This is just about the, you can say, a broader term or the upper surface. But if we go down in the depth, we will find out there are various services offered by the bank. Like only we had when we were discussing about the loans. Okay, then we had discussed there are various type of loans: personal loans, okay, car loan, okay, home loan, all right, thereafter trip loan, thereafter you can say education loan, okay, various kind of services and various kind of things. And do you know, the Reserve Bank of India time to time generates a new guidelines as per the requirement of the time about all of these things. Okay, that's why it is very necessary that the top management, or you can say the board of directors, they must have a financial acumen. It means that they must have a knowledge of all these financial services. Then only the bank will be able to do the things. All right, including the financial reporting. So they must be able to understand whether they are making the profit or they are suffering the losses. All right, profit making and loss suffering. So this picture could only be cleared if they find it that the financial reporting, in short, we also called it audit reports. What do you mean by audit? Basically, we will discuss in the BRA lectures when we will have a discussion over the audit provisions provided in the Banking Regulation Act. Okay. So after analyzing the audit reports, if they're having the financial acumen, then they will able to understand whether they are making the profit or loss suffering. After analyzing the audit reports. Okay. Thereafter, the asset liability management. It means that there is a concept of balance sheet. What do you mean by balance sheet? So balance sheet is basically you can say particular track record. By definition, let me explain you. It's a particular track record of assets and liabilities to understand whether the organization is making growth or suffering a losses. Okay, so balance sheet is basically a particular track record of assets and liabilities to understand whether the organization is making growth or suffering the losses. All right, and generally it is look like this. Okay, there is a segregation between them like this one. Okay, on this side there is a assets. On this side there is a liabilities. All right. So all the assets of the bank or any organization have should be written down here. All the liabilities the organization or the banks have should be written down here. Okay. So any person or even the banking management itself could easily read out the assets they have and the liabilities they have. Okay, and this will show whether the bank is making the growth or suffering. All right, so now the question is how by analyzing the things we would be able to tell these things. So in case of assets more than the liabilities, in this scenario the bank is making growth. All right, second, in case of assets lesser than the liabilities, in such a cases the bank is suffering the loss. And it is not only for the banks but also for the another organization also. Okay, so now there is a question that these assets and liabilities contain various particulars or things. Okay, so if the banking top management or the directors by themselves are not able to differentiate between the particulars to include them into the liabilities and the asset, however this is will done by the CA or the auditors, but the top management is required to match them and find out the correct position. All right, so if they by themselves are not able to do it, then how they will manage the things. All right, thereafter the risk assessment, like to whom they should provide the loan, what should be the interest rate, okay, and how to cope up with the prevailed competition in the market. So all these kind of things are basically comes under the financial acumen. Thereafter, financial acumen is vital for making informed decisions about lending, investment, and capital allocation. Why? Because it provides clear cut information about the current condition of the bank or organization. All right, it means that by analyzing the balance sheet, by analyzing the risk assessment, and by doing all the things, directors, or you can say the board of directors, would be able to understand what is their bank's current position. It means that whether they are making profit, okay, whether they are just recover their cost, and whether they are suffering the loss. Okay, so if they are able to interpret the things carefully, then they would be only able to make the decisions about the lending, investment, and the capital allocation. Thereafter, once the policy will formulated, then who is responsible to implement the policy? Come on, I had told you about it in the previous lecture. Who is responsible for this? The correct answer is Chief Executive Officer or CEO. All right. Thereafter, the term is knowledge and the expertise. Banking is a highly regulated and complex industry. Those in management positions should have a deep understanding of banking operations, including compliance with financial regulations, risk assessment, and credit analysis. All right. So if we go with the first word, which means the regulated, then we know banking is a highly regulated. Why? Because it is important for economy as well as for customers. Okay, if the banks are doing a good business, so that's why, to ensure that they are doing the business ethically, professionally, effectively, efficiently, this banking sector is being controlled by the various provisions. All right. Second is the complexity. So you can generally say why the banking sector is said to be complex. Like they have to accept deposits and grant loans. All right. And then they could do two things. On the bank deposits, they will provide 4%, and on loans they could ask 8%. All right. So the remaining 4% will be their profit. We could simply say that. Even I had told you when we were discussing about it. But in reality, when you go inside the bank and when you start just searching about the banking services, there are lots of services provided by the banks. Even there is a competition in the market also. Like bank X is competing with the banks B, bank Z is competing with bank A. Okay, so there is also a competition in the market. That's why the banking sector is very complex. So if the top management is not having the knowledge and the expertise in various fields or in a particular field where the bank is dealing, so you couldn't imagine what would be the condition of the banks. Okay, the bank will not be able to survive for a long. All right. Expertise in emerging financial technologies and market trend, it's also valuable because with passing of time, banking sector is also evolving. All right. So if any particular bank is not getting in touch with the current time, then the bank will not be able to survive for a long. All right. Thereafter, prior experience within the banking sector is often a critical qualification, provides first-hand knowledge of the industry's intricacies and the challenges. Okay, let me give you an example. Just suppose you and your friend, you and your friend went out for vacations on mountains. All right. Suppose there are four people you are. Okay. The first one is not know driving. Okay. Second one is also the person who do not know how to drive. The third one is knowing how to drive but not have prior experience. And the third one is that knowing driving and also having prior experience. Okay, so now suppose if you are going on such kind of trips and you're having this kind of conditions and you're having this kind of friends, then the question is whom you will prefer to drive the car. Whom? The person who do not know the driving? No. The person who know the driving but do not having a prior experience? No. Why? Because you have a person who know the driving but also having a prior experience, because he will know that how to drive a car in that area, what should be done in certain cases. Similar things happen with the bank. Okay, it may possible that the person having bookish knowledge about field in the you can say company or organization. Okay, but still the person who is experienced in handling of real time scenarios will be better. Why? Because that person do not know about the real time challenges. He only know about the bookish language. But the person who having the experience of real time problems will have far better you can say tricks and techniques to handle the situation than that one. Okay, that's why prior experience in banking is always preferred while selecting a person as a board of director member. All right, experienced managers are better equipped to navigate issues related to loan portfolios, interest rate risk, and the regulatory compliance because they had previously worked for this kind of things. So if they are doing something and having the issue, then they know how to make it possible. All right. Thereafter, the education qualification. While there are no strict education requirements outlined in the Act, higher education in finance, economics, or related fields can enhance an individual's ability to make informed decisions. So you can say there is no prescribed higher or basic qualification is required under the BRA Act 1949. Okay, there is no prescribed higher or basic information required. But still, if they are graduated in their higher studies in the field like finance, like economics, like accounting, then it means that they will have a special kind of knowledge in that particular fields and it will be beneficial for the bank's management. Okay, so remember in the act there is no strict qualification requirements, but if the person belong to these fields and have done their higher education in this field, then this will beneficial for the bank. Okay, management often benefits from formal education combined with practical experience. Suppose if a person who was graduated or having the higher education in the accountings, and now he is having 3 years of experience. So this person is having both bookish language as well as practical knowledge. Okay, so he or she could done many things together. Thereafter, fulfillment of regulatory requirements. The Act includes various regulatory requirements such as age limits and disqualification for management position. These requirements are in place to ensure the fitness and propriety of candidates. Okay, let me tell you one thing. If we talk about the minimum age, okay, so person must be equal or older than 18 years of age. It is a minimum requirement. Okay, the person below 18 years could not be appointed as a director. All right, about the maximum age period, then there is no certain criteria, but even for the independent directors, if they had crossed the 75 years, then they are to be excluded from the board of directors. All right, second thing is that apart from the age limits, there is other provisions for the disqualifications of the director. Suppose if he or she is involved in some malpractice, if they involved in some fraud and other things, in some scenarios, with the virtue of RBI powers, the RBI could remove the person from the board of directors. Compliance with these requirements is essential for maintaining the bank's regulatory standards. It means that the top management, which are responsible for managing the banks in day-to-day operations, even in the long-term operations, they must be adhere to the prescribed rules and regulations. If they are not, then this will be a serious consequence for the banks. Okay, so students, basically we have finished with the control over management provisions regarding the BRA Act 1949. In the next lecture, we will start with some another provision. Till then, just revise all the facts and figures we have discussed in this lecture and be ready for the another lecture. With this note, let's end this lecture and thank you.